Back to the deep dive. Today, June 5th, we're digging into a mix of financial and business news, mostly centered on Malaysia, but also touching on some key global events.
Yeah, lots happening.
Our goal is really to pull out the important bits from all this information and, understand what it means for you.
Absolutely. We've got market shifts, some big corporate moves, and these global dynamics that are definitely having an impact right here.
Okay, let's kick off with the Malaysian company news then. First up, the FBM KLCI index. Saw some changes after the review.
That's right, the semi-annual review. AMMB is officially back in.
Back in, right.
And Hong Leong Financial Group is out. That takes effect June 23rd.
And why should you care about that?
Well, these index changes, they can really influence where big investment funds put their money. So being included or excluded, it can affect stock prices, visibility, that sort of thing.
Makes sense. And speaking of big financial moves, Affin Bank, they stepped into the U.S. dollar bond market.
They did, a U.S. $300 million issue. But the interesting part, I think, was the demand. The order book reportedly topped $1 billion US. Really strong global interest. For Affin, it shows growing international confidence, and it's a strategic way to manage their capital.
Okay. Then on the acquisition side, EssilorLuxottica, the big eyewear company.
Yeah, the French-Italian giant, Ray-Ban, Oakley, those guys.
They're looking to buy A-Look, Scene, and OWL optical chains here.
Exactly. That would give them over 90 stores in Malaysia. It's, well, a pretty clear sign they see real potential here and want much more direct customer access.
Big footprint expansion. Now, shifting to construction. Ecompile. They landed a contract for the Penang LRT.
Yeah, a decent-sized one. RM $42.82 million for piling work. It's good news for them. Should start helping their numbers from financial year 2026 onwards. Part of that bigger infrastructure push.
Got it. Now, here's one that seemed to cause a bit of stir. IOI Properties taking full ownership of that Singapore project.
RM $2.75 billion. The idea is to boost their profits, obviously.
But analysts are a bit worried.
Yeah, the concern is debt. Taking on that much, RM $2.75 billion, and likely borrowing in Singapore dollars, maybe at floating rates, it could really increase their borrowing levels, their leverage. Plus, currency and interest rate risks. It's a significant gamble.
High stakes indeed. And one more on the corporate front. Tata Electronics. There's talk they might buy a plant here.
Yeah, fabrication or, more likely, an OSAT plant. That's outsourced semiconductor assembly and test.
And that would be bid because...
Well, if a major player like Tata sets up or buys an OSAT facility here, it's not just the investment. It really strengthens Malaysia's position in the global semiconductor supply chain, testing and packaging chips. It fits into that whole trend of companies looking for production bases outside, say, China.
Okay, let's broaden out to sector trends and policy now. Oil and gas. The outlook seems a bit gloomy.
Yeah, analysts have been cutting forecasts for 2025. Some are saying it could be the weakest performance in, like, a decade.
Wow, why is that?
Mainly falling oil prices. And there's an expectation Petronas might have to cut back on capital spending. There are even reports Petronas is planning workforce cuts, maybe around 10%, because of tough margins.
Tough times.
But it's worth noting, Malaysia is still seen as important for upstream investment and energy transition projects.
Yeah.
So it's not all bad news long-term, just near-term pressure.
Right. And then the steel industry, they raised a red flag about the U.S. tariffs.
They did. The Malaysian Iron and Steel Industry Federation. They're worried about that doubled U.S. tariff, the 50% one.
Not just about exporting to the U.S., right?
Exactly. Their concern is it's causing a flood of cheap imports into Malaysia from places like China, South Korea, Vietnam. Basically, steel that can't go to the U.S. gets redirected, and it can really hurt local producers if there isn't quick action. Shows how global trade actions hit home.
Definitely. But let's talk about some positive news. Foreign direct investment in Johor, quite a jump.
Oh, absolutely dramatic. A nearly seven-fold increase in the first quarter. Reach RM $27.4 billion. Yeah. A lot of that momentum seems to be coming from the Johor-Singapore Special Economic Zone initiative. It's a really strong signal of investor confidence in that specific area. Real results.
That is impressive. Okay, let's look briefly at the global picture. Those U.S. tariffs on steel and aluminum are now in effect, and China's rare earth export limits are still causing issues.
Yeah, both highlight these ongoing trade frictions and how reliant industries are on specific supply chains. Rare earths are critical for things like electric vehicles, auto manufacturing. Restrictions cause real headaches. It's a complex global picture for businesses.
And against that backdrop, recent U.S. economic data may be pointing towards Fed rate cuts.
It seems to be reinforcing that expectation, yeah. Softer services activity, jobless claims ticking up. If the Fed does cut rates later this year and maybe the U.S. dollar weaken,
And emerging markets could benefit.
that's the thinking. Assets in places like Malaysia could look more attractive to global investors. So that's definitely a key trend for you to watch.
So wrapping this up, we've covered quite a bit. Index changes, big deals like Affin's bond and EssilorLuxottica's acquisition, concerns around IOI's debt, potential boost from Tata, then sector challenges in O&G and steel, but also that huge FDI success in Johor, all against this backdrop of global trade tensions and shifting rate expectations.
That really paints a picture, doesn't it?
Mhm.
An economy juggling these global pressures while pushing ahead with its own plans, attracting serious investment in key areas. Shows resilience.
I think, for me, that Johor FDI surge really stands out. It shows that targeted strategies like the SEZ can deliver pretty remarkable results, even when the global environment is, well, complicated.
Agreed. It leaves you wondering, doesn't it? As Malaysia keeps finding its place in these shifting global economic currents, how effectively can these pockets of success, these strategic wins, build enough momentum to really drive growth across the whole country?
A key question indeed. That's all the time we have for this deep dive. Thanks for tuning in.
Make sure you subscribe to the Malaysia Money Matters podcast so you don't miss our next session.
See you next time.
Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.